Morning, everybody. So let's get started with the Aussie South African top 40 this morning. And yeah, pretty much a down day as was expected yesterday. But the question now is, have we found a bottom? And we are tracking the US markets. So be sure to watch my Dow video, and then you'll see what my take is on the Dow at the moment. So let's get cracking. Again, we start with the weekly, and you'll notice that I redraw my trend lines every single time. Okay, the reason being it helps me to stay focused on what's going on, and it also keeps the different levels fresh in my mind, so I can make quick decisions without really being in front of the chart. So the critical level here is still the weekly Kijinson, this red line. So let's just put that level in. Okay, and you can see how we touched the 50 moving average, 50 EMA, and we bounced off that. So I think let's just put a line on that 50 moving average, okay? And when we drill down, we can see exactly what price did at that level. Okay, now the very interesting thing for me is that we have a pretty solid range bar. I really I enjoy these range bars when the tails are equidistant from the body. So I'll give you an example. There's one there, and you can see how we broke up, found some resistance at the 38.2% extension of the range, and then we got the first target, just blew past the first target, and then found some support resistance at the 161, the 161.8% extension of that range. So you can see how these range bars are often traded as a range. Okay, so this one here, which has set up now, we obviously are looking for a break either way. And yeah, you can see when the 50% of the range is in the body as well. That's an ideal setup. It's perfect. So a break to the downside gives us this area here, which will be the daily Kijinson, and a break to the upside gives us the previous highs. Now, the thing you need to pay attention to here, we've been tracking down along this trend line. Okay, then we had a pin bar that came down here and retraced all the way. Okay, which is a very bullish signal. Now we've hit this top trend line. We've hit it once, we tried again, and we fell off. But for all intents and purposes, we still have a bullish twist here. We still have a bullish crossover of Kijinson and Chikinson, and we don't have a bullish sequence span yet. But in my opinion, that's coming. Okay, and the other thing that has happened, and we'll see this on the 4-hour. Okay, so now you can see this 50 EMA on the weekly just happens to coincide with the neckline of this shoulder, head, and shoulder. Okay, so what you have now is a perfect swing trade setup, because on the 4-hour we have had a exhaustion bar to a level, this red one, which closed on its low, and then we failed to get through the level. We bought, and the bears still try to push it down and still try to push it down on the next 4-hour candle. And this kind of setup is typical of a reversal. So you have an inside bar, you have the double inside bar here. So both these bars fits inside this candle body. Okay, inside bar, inside bar. So that's a double inside bar. And we're off a level, so we're off the the 50 EMA on the weekly, as well as this neckline, head and shoulders neckline. Now I know it's not exact, and price action is never exact. That is the level, and then what always happens is the targets will be the next levels. So the next level on the 4 hour or the hour, and you'll see it clearer on the hour. So you'll see there's a Brooks gap. So let's just put it in. Okay, this bar here is a tiny little Brooks gap, which we didn't get. There's a breakout, this tail. Okay, let's zoom in. So there's the Brooks gap. There's the previous low, is that tail, and then that one is there. We come across to see none of those were hit. So look on the inside of this area here, because there's the previous breakout. So this bar broke through, came back. We didn't really test this. We broke through straight away and continued up. So that is a level that you need to pay attention to. And it's also that tail. Have a look. We didn't quite get to it. So the key element here was the weekly 50 EMA. And that is why I say, your levels are so critical. And you need to start with the weekly, and you need to mark them on your charts. Okay, so I'm sitting long at the moment. So I'm sitting long at the bottom here. I have a stop loss below this level here. So now, so I'm kind of long in the middle here, and I'm sitting with a 200, I think it's a 250 pip stop loss at the moment. Okay, on the hour you can see this is also the 100 EMA. Okay, and we closed around 5200. Futures is 200 points up at the moment, so I'm nicely in profit at the moment. So now the things that you need to watch for. And this dark green line, this was yesterday's S3. So you can see how we battled with this before pushing through with a proper exhaustion bar to a major level, being the 50 EMA on the weekly. Okay, so Kijinsen and Tikinson have flattened out, which is a good sign. And for me, I'm looking for an attack back at this level. So I'm expecting a gap close here, and I'm looking for an attack back at this trend line. And to be quite frank, I'm expecting this trend line to break. Okay, and I'll explain more in my Dow video, and you'll see why. But that's my take at the moment. So I'm sitting long, and I will be scaling in as we go along. So first long is in down the bottom. As soon as the market's opened and established, at the next pullback on the hour, I will get in long again, and then I'll keep getting in long, scaling in pretty much all the way up. Okay, and your levels, if you're looking for the day traders out there that are looking for levels of where to get out, so your first, let's just clear all this stuff, so otherwise we're going to get really messy. Okay, so your first level is going to be Dickinson over there. Your next level is going to be the cloud. Well, it'll be one. So you're going to have Kijinsen and the cloud together. So let's just put it kind of in the middle here. And I see it's going to line up with R1 daily. Yeah, so it'll line up with R1 daily. So that's the level that I would use there. Okay. Your next level after that is going to be the gap. Okay. And once the gap goes, you'll have the previous high here. Let's just go for that there, which lines up with R3 daily. Okay. So those are the levels that I would look at today. If we do get that high, that'll be pretty interesting. because that's 800, right? It's more than possible for the Aussie. So those are the levels that I'll be looking at. And basically what I'm saying is that you'll have price come to here, pull back, find support, hit here, act as resistance, come back, find some support somewhere, and then back up, and down, and then back up. This break of the cloud will be pretty bullish. Okay. And the reason I say that is on the 4 hour, we are still technically bullish. So we're green. We have had it come together here. So this may be seen as a crossover. So if Dickinson stays above Kijinson here, okay, so got to zoom in. So we've got a bearish crossover. So if we recross back over, that gives us a bullish signal, and a bullish crossover above the cloud with Chiku span above price is extremely bullish, which gives you continuation. So that's why I'm saying there and then the top trend line. So once we've hit this level here, the gap, then we're looking at that area there where there will be a bit of a pullback and then some more move to the upside. Okay, so that's the Aussie, guys. Hope it helps. Happy trading, and if you haven't subscribed, don't forget to subscribe. Catch you later.